Thursday, December 27th, 2018, Maneco 64, home of alternative economics and contrarian views. This morning I want to talk about silver and how I think it's pointing to a confirmation of a new leg of the precious metals bull market, a secular precious metals bull market. If you go back all the way to 2000, 2001, also a shorter term bull market if you go back to the end of 2015 when gold bottomed at 1,045 or thereabouts. I will also look at the stock market and the massive rally we saw yesterday, and I'll talk about what I think, and I'll do that through an article that I found that explains in my opinion, what happened yesterday to the stock market. It's 7:42 a.m. London time. Before I go through silver and what happened in the stock market, of course, I'll look at what we're doing this morning. I'd also like to say, if any of the new subscribers, new viewers, would be interested in some Maneco 64 merchandise, there is a Maneco 64 store on Teespring. The link to that store is below in the description. You can get things like End the Fed, Maneco 64, End the Fed mug, Maneco 64. It says here, home of alternative economics and contrarian views. There's some Billy mugs as well, and t-shirts and other merchandise. And that helps keep the channel moving. Channel's going well, but you never know with YouTube and monetization. I haven't had problems lately. Anyway, what are we doing this morning? Well, gold yesterday was kind of disappointing. We almost got to 1280, and then after that it just drifted lower and lower. The stock market kept going up and up. Silver maybe feels disappointing, seeing that we closed just around 15 after being up to almost 15.20. But I'll talk about why I think it's yesterday was a good day for precious metals. But this morning right now, gold is 1267.12, unchanged really. The high's been 1272.50 and the low 1266.20. All these prices are spot prices. Some people will use the futures prices, and these prices are higher because of the futures price always taken for future prices. So with interest rates being positive, that's why the prices are higher. But I like to look at the spot. The Dow right now, the Dow future is down 78 points, or 1/3%, 22,796. S&P is 2,457, down 10, or 0.4%. Nasdaq 100 future 6,220, down 40, or 2/3%. So I'll go quickly over what happened yesterday. Before I go into silver, really, I think it's better to do this now that we've seen what the stock market is doing today. Well, yesterday, of course, was a huge day. The Dow was up over 1,000 points, 1,086, just under 5%. The S&P was up 116, 4.96%. And the Nasdaq Composite was up 5.84%. One thing I like to say before I look at this article that describes pretty well what I think went on is that if you go back in time in the 90s, you know, the Dow was trading 2,000, 3,000 back in early mid-90s. So a 4% move or 5% move would be 100 points. But nowadays with the markets almost at 30,000, this is what we're getting. We're getting not only on the downside in terms of 1,600, 1,100 point drops, we're going to start getting these big short covering rallies or rebounds that seem huge. And, you know, of course, I don't watch the mainstream media anymore, CNBC or Bloomberg or Fox Business. I'm sure some people say, "Oh, this is it. Great day. Stocks are up 1,000 points." But I think we need to keep that in mind. The percentage, that's what counts. And the other thing I would say, I remember back at around this time last year and beginning of this year, when cryptocurrencies, Bitcoin particularly, topped around 20,000, some people were getting ahead of themselves, saying, "Oh, by March this should be fine. We should be rebounding back to make new highs." And one of the things I said, even though I am still in cryptocurrencies, is that this correction was going to take a lot longer. And it's the same thing for the stock market. We've had since 2009, we went from 6,600 to 27,000 in the Dow. It's going to take a lot more time and much more correction to for this market to bottom. I recommend an article on Zero Hedge. I'll put a link to it below in the description. And I quote, "This isn't normal price action. Was today's historic surge just a bear market rally?" And they talk about all the reasons people have given. One was that Trump told people to buy the dip. One was that CTAs, commodity trading accounts, were short squeezed. So were hedge funds. One was that pension funds had to rebalance their portfolio, so they had to inject $64 billion into the market. And what does that mean? Well, with the markets having come down 20%, well, that's what the S&P went to, almost bear market territory prior to yesterday. Pension funds need to add on to their stock portfolio before the end of the quarter, because some of them have rules that they have to keep a certain amount of stock. So there's talk about all of that. And then there are comments, from the traders, and that things were overdone on the downside, and that we see the biggest moves like this usually in a bear market. And there's even a chart here I'll read. It says, "The best visual confirmation that today's rally was nothing but a face-ripping short cover rally in the context of a bear market comes from Matt Thompson, who today tweeted the following chart showing historic market gains of more than 4% since 2000. Not surprisingly, the biggest cluster took place during the financial crisis late in 2008 and early in 2009, before the market eventually bottomed." So there you have it. That's what I think happened yesterday. I don't think we're anywhere near a bottom in the stock market, and we're not anywhere near a top in precious metals, and I'll come to that in a minute. So let's look at the currencies. Right now, the pound is up 0.17%, 126.53. Euro is up a quarter at 113.80, and the dollar is down 1/3% against the yen, just below 111. Dollar is unchanged against the yuan, 689.50. Crude oil rebounded well yesterday with this short covering rally in the stock market, but today we're down about 1.2%, 45.76 WTI. The 10-year yield, I opened up the page this morning and I thought, oh, we're going to be at 285. We saw a 1,000-point rally in the Dow. But no, it's down 3 basis points at 278. That's another signal that I don't think we're near a bottom in the stock market. So what about silver? I've spoken many times in the last few years about how in a proper, by proper I mean that the public is seeing it and talking about it, precious metals bull market, we need to see silver outperforming gold. And despite the fact that gold bottomed, it bottomed in December 2015, but recently we also had a bottom at 1160, which was the August 15th bottom, 1160. And since then, though, the gold silver ratio, which is basically just the price of how many ounces of silver you need to buy 1 ounce of gold. So it's the price of gold divided by the price of silver. Ever since that time of August 15th, the bottom in gold, the ratio has been going up, which is a signal that gold is outperforming silver. But so there's always worry, that silver's not confirming the gold bottom, that things could turn around for precious metals. And yeah, to some extent it has done that, because we've gone to levels around 86, which are historically very high for that ratio. And we need to see that ratio actually dropping in a bull market. And as you can see, yesterday was a big day for the ratio, because we dropped all the way from 86 to 80, around 86 to like 80, below 84.50, almost down to 84. So silver really outperformed gold. We're still not clear, if this is just just a correction, and it was, and gold is going to keep outperforming silver. I'll show you here a 1 month chart, just to see in the context historically. We are at levels that we haven't seen since the early 90s, early mid 90s. So ideally, we want to see this ratio get back below 80. That would be a very good signal, or even 83, which was the high in 2016. So need to keep an eye on that. But what's the other signal that I think silver gave us yesterday? Well, it was the fact that I'd been talking about this 1491 level. These were highs like beginning of October and also beginning of November. And I said we needed to break above that 1491. And we did that yesterday very, very clearly, and with a lot of room. We closed above 15 yesterday, just around 15, I think, or above 15. Today we're back below 15, but I think now that 1491 will be support. And you can see now that there isn't much room resistance on the upside. And I think this is a clear bottom for silver. And that's why, the probabilities for me is that that gold-silver ratio now has topped. And we're going to see silver doing very well relative to gold. And that's a good thing overall for precious metals, because historically that's been the way when you have precious metals bull markets. That rate, silver outperforms, mainly because it's such a smaller market and less liquid, and it's more volatile. And so as it underperforms on the downside, and by that I mean when gold drops in a bear market, silver drops even more. It's the same way on the upside. So, stock market, as I said, I think this was just like a rally in the bear market. We're far from over, correcting on the downside in the stock market. Precious metals, I think the key for yesterday, even though it was a bit disappointing, the price action in gold, I think under the surface it was a very good day because of what silver did. If you enjoyed this video, make sure you hit the like button. If you are not a subscriber yet and you enjoy my videos, make sure you subscribe so you get notified of my new videos, which I make virtually every day. You can also follow me on Steemit, DTube, and on Twitter. And don't forget to share the videos if you enjoy them, because that helps as well. So I wish you all a great day, and I'll talk to you later. Bye.